What would you give to look at a millionaire's bank account transaction history? Well, I was paid, that's right, paid to look into several bank accounts owned by millionaires, multimillionaires. I couldn't take any money out, obviously, for obvious reasons. But what I did take was knowledge.
Knowledge.
That's right. And I'll give you exclusive access if you buy my course. I'm kidding.
It was a joke.
I'm kidding. All right. What's up, nerds? My name is Andrew Scott. And nope, this is terrible. Restart. All right. I've been a banker going on almost a decade here pretty soon.
I'm old.
I'm not rich, not a millionaire, but what I do have is a little bit of experience that I can share with you. Let's talk about some of the things that I learned while helping members over the years and discuss my observations when it came to my millionaires. How exactly was I able to get away with this, first of all? Well, these people asked me to. Why? Because I was their banker. They came to the bank and they would ask me to review their account if they needed to report fraud or ask for guidance on, some of our financial products or services. I won't tell you, specifically what financial institution or financial institutions plural that I worked for or over the years, because I don't know, I don't want to give up too much. Okay.
I have a secret.
All right. So item number one is wealthy people are on top of their finances. They know, excuse me, I just burped. Just did it again. Wealthy people are on top of their finances. They know what is going on with their accounts. They review their accounts, they ask questions to help them understand so they can make informed decisions. They know if money is missing.
Panic, no panic.
One of the things that I'll always remember, Mark Cuban from Shark Tank shared, I don't know if it was in an interview or what, but I think he gets a text message every day, from his bank, and it tells him how much is in his account. And so if there's a bunch of money missing, right, he's going to know about it. Now that'll look maybe different for you and me who don't have millions or billions of dollars, but the main thing is that they're on top of it. I think that's the main takeaway, So anyway, number two, millionaires have multiple income sources in retirement. Through their working life, they utilize different investment and retirement strategies to set them up for retirement. How they do it? They had money in maybe a Roth IRA or a traditional IRA, maybe an employer matched 401k, stock dividends. There was this one lady, I'll always remember, she brought in a check that she wanted deposited into her account, and it was her dividend check. And it was the first time I had seen anything like that. It blew my mind. I was like, just because you own stocks, they just pay you, and you don't have to sell your stock. It blew my mind, and I will always remember that. So I think I'm going to do maybe some experiments with buying some dividend stocks and see what that's all about. I think there's more to be learned there. So, And so anyway, selling company share. So selling company shares. So, right. So if you own stock, you can sell the shares that you own, and you get paid for it. And there's a lot that goes into that, right? With tax implications or, you just gotta make sure that you have maybe a tax professional that's making sure that you're not going to be taxed unnecessarily because you sold too much, or that put you into another tax bracket or something like that. But anyway, this is not financial advice. I'm just saying there's things to think about. Okay. All right. Anyway, so they might have rental income, or maybe they owned a small business, but disclaimer, not everyone had all of these, right? This is just they might have had some mix of some of these. On average, they had at least three, I would say. They had some sort of mix. So, and another reason why I know all of these, because sometimes people don't have every type of income source deposited into the same account. But if I was helping them with a loan for something, and yes, rich people still take out loans, and again, they're sometimes it's a tax strategy, sometimes it's them not wanting to They don't want to cash out all of their like liquid cash, right, that they have. One reason why I was able to see all the income sources that they had, because I helped them with their loan applications. And so part of that is you have to collect, their types of income that they have. And it was like pretty impressive and eye-opening to see them, list like, hey, some people had like 5 sources of income. It was pretty incredible, and from some of the items that I listed above. So, but hey, call to action. If you are enjoying this video, you will love my next video when I talk about what an offshore bank account is, what maybe some of the benefits are, and if it's possible to open one yourself. So click the subby-dub-dub button so you don't miss when the video drops. I love you. Back to the video. Number 3, and I talked about this a little bit, but they watched their taxable income, which is not the sexiest thing to talk about, but that's what rich people do. They stay on top of their taxable income, because if you're in retirement and you are going to take out, a bunch of money from your retirement account, or you want to sell some shares or what have you, if you don't want to do, like, I wouldn't want to do more than what I absolutely needed, because I'm going to get taxed on it. And depending on how you planned, it might be a lot. So you don't want that to go to waste, right? Like, you worked hard to put that money in there, and hopefully over many, many years you got to see it grow, and you don't want to just see that all go to taxes. So anyway, that's what rich people do. So yeah, even if you have a few million in your retirement accounts, doesn't mean you want to cash it out when you hit 65, because the more you take out, the more you get taxed on. So they were careful not to take it out more than what they need. They were careful not to take out more than what they needed for that year. An example might be, maybe your friends invite you to a cruise, but your regular budget didn't include travel that year. As long as it didn't mess up your retirement planning, you could take that money maybe from your Roth IRA, because you already paid taxes on that money. It wouldn't have to move you into like a higher tax bracket, because it's not counted as taxable income. Yeah, as you are, thinking about your own retirement, maybe thinking about how you're structuring that, as far as, what all you're going to be kind of distributing, for yourself in retirement, the money you're going to live on, whether it's going to be the majority of it from your 401k, or if you're going to pepper in some from your Roth IRA. Hopefully by then, when you reach retirement, you have enough in there to kind of, supplement your income, and so that you don't have to be taxed as much if you're able to take more of it from your Roth IRA. But again, I highly recommend talking to an advisor that you feel like you can trust. The biggest takeaway, number 4, they contributed consistently over a long period of time to their retirement accounts. The biggest difference between someone that has a comfortable standard of living in retirement and someone that doesn't is just this. They make consistent contributions to your retirement, starting as early as you can and letting compound interest do its work. It doesn't have to be anything crazy. Like if you started with $5, every paycheck or something like that, and then just made a goal to maybe you double that in 6 months, or, just start small. But if you start now, you will see the fruits of that grow over time. So how can you copy what these rich people do? Start small, start now. Don't care about how small your start is. Consistency is what matters right now if you're just starting out. Use some retirement calculators to help yourself get excited. I know that gets me excited and might help motivate yourself. This is what I do. I go in and I'll punch in some numbers about, if I can contribute this or that, $100 a paycheck or whatever it is. How much, if I do that consistently, how much will that be if I invested that in the stock market, earning an average of, let's say, 8% to be conservative, with compound interest, how much would that grow to? And it's pretty exciting. You see how, what people talk about when they say that compound interest is like, the 8th wonder of the world or whatever. So anyway, so get curious, check it out. And then the next thing is find a banker or financial advisor that you trust and that will answer all your questions. You want someone who is not afraid or bothered by answering your questions. So I would even, yeah, just go and wherever you bank and ask them some questions, see if you feel like they can either be that resource for you or direct you to someone who can be a resource. So go and visit a credit union if you can, and ask for help with your short-term or long-term financial planning. Most places will have a minimum amount you need to start investing, so just as a heads up, but they'll help build a plan to get you there. This is a great chance to find out more information and get educated. The right banker or advisor will be happy to take the time to go over all of this with you. Make an appointment for it ahead of time, stating what you're visiting for, and they will hopefully help you sit with the right person.